Hello everyone, it's Wednesday, May 7. Today we're taking a closer look at the euro and British pound charts to assess potential market shifts. Both currencies gained solid upside momentum against the US dollar on Tuesday. In early trade, three key assets were buoyed by stronger than expected services and composite PMIs from both the Eurozone and the UK. In the euro area, services activity rebounded above the key 50-point mark, printing a 50.1 versus a forecast of 49.7. The UK services PMI also showed sign of stabilization, inching up to 49 and nearing expansion territory. These readings reinforced optimism that both economies may be more resilient than previously feared. Meanwhile, Eurozone producer prices posted a sharp decline in March, fueling expectations that the European Central Bank will stay on a dovish path and continue cutting rates. Later in the day, disappointing US trade data added further pressure on the greenback. The trade deficit widened to a record high in March as businesses accelerated imports ahead of President Donald Trump's sweeping new tariffs. The data waned on US growth prospects for the second quarter and boosted demand for the euro and the pound. Turning to today's macroeconomic calendar, it includes Germany's factory orders, France's trade balance, and euro area retail sales. However, all eyes will be on the Federal Reserve's interest rate decision. The US Central Bank is widely expected to keep its benchmark interest rate at 4.5%, a level considered high given current economic conditions. Despite a clear deceleration in US growth during the first quarter of 2025, the Fed remains cautious about cutting rates, citing concerns that President Donald Trump's sweeping trade tariffs could reignite inflationary pressures. Fed Chair Jerome Powell's remarks at the post-decision press conference will be closely scrutinized. A hawkish tone from Powell could weigh further on the US dollar, potentially lifting the euro and the British pound. Conversely, if the Fed chief signals his willingness to ease policy at upcoming meetings, the dollar may find support and optimism that monetary stimulus will help sustain the economy. Let's now move on to technical analysis. The 1-hour EUR USD chart shows that a decline followed by a false breakout at 1.1341 would generate a buy signal, with the euro likely rising to 1.1379. A break above this level would pave the way for further upside to 1416 and potentially 1453. At this level, I would recommend short positions on the rebound, anticipating a 35-40 pip intraday correction. Short positions at 1416 and 1379 should also be considered if a false breakout occurs. The target will be 1341, the midpoint of the sideways range. If the price returns below this level, the euro-dollar pair could drop to 1306, potentially reaching 1269. At this mark, it would be wise to go long on a rebound, targeting a 35-40 pip move. Going long at 1306 and 1341 would only be relevant following a false breakout. Speaking of the British pound, yesterday's rally was partially reversed. Buyers now need to regain control of 33.68. A breakout and firm consolidation above this level on the back of strong UK data could push the pound-dollar pair up to 33.99, with a further move toward 34.37. At this level, it would be prudent to consider short positions on rebound, aiming for a 25-30 pip intraday pullback. Short positions at 1.3399 and 33.68 should also be considered on the false breakout, with 33.35 acting as a primary downside target where renewed buying interest may emerge. In case of subdued buying activity in this area, a break below 33.35 could trigger further weakness, opening the path toward 33.01 and potentially 32.60. At this mark, long positions on rebound would be justified targeting a 35.40p recovery. Going long at 33.01 and 33.35 would only be appropriate following a false breakout. Best of luck to all.